You know, I've spent decades watching how government policy shapes the financial lives of ordinary Americans. And what's unfolding right now with Social Security deserves your undivided attention. The mathematics are simple, but the implications are profound. We're looking at a $2,000 direct payment initiative that's moving through channels most people aren't monitoring. And I mean genuinely monitoring, not just scrolling past headlines. This isn't speculation or clickbait. There's an executive order on the table, and unlike the usual Washington theater, this one has teeth, timelines, and actual budgetary allocation behind it. The exact disbursement date has been established, and for those who've paid into the system for 30, 40, 50 years, this represents something more than just another government promise. It's a recalibration. Now, I've always believed that the best financial decisions come from understanding not just what's happening, but why it's happening and when you need to act. So let's cut through the noise and examine the actual mechanics of this payment, who qualifies, what the executive order specifically mandates, and most importantly, when you can expect these funds to arrive in your account. Let me begin by addressing something fundamental that I learned early in my career at Berkshire Hathaway, the difference between information and understanding. You see, most people today are drowning in information but starving for actual understanding, and nowhere is this more evident than in how Social Security changes get communicated to the very people who depend on these benefits most. I've watched government programs come and go over my many decades, and I can tell you with absolute certainty that what we're witnessing right now represents one of the most significant direct payment initiatives targeting Social Security recipients that we've seen in years, and yet the way it's being reported in mainstream media misses the forest for the trees entirely. The $2,000 incentive payment we're discussing isn't some theoretical proposal floating around congressional committees waiting to die in subcommittee. This is a concrete initiative backed by executive action, which means it bypasses much of the typical legislative gridlock that kills most well-intentioned programs before they ever reach the people they're designed to help. Now, I've always been skeptical of government efficiency. Warren and I used to joke about it over lunch. But when an executive order carries specific budgetary language and timeline provisions, that changes the equation entirely. This particular order mandates the Treasury Department to process direct payments to eligible Social Security recipients. And the language is refreshingly specific about qualification criteria and disbursement schedules. Let me walk you through the actual mechanics of this program, because understanding how it works is essential to knowing whether you'll receive this payment and when. The executive order establishes eligibility based on several clear parameters. First, recipients must be currently enrolled in Social Security retirement benefits, Social Security disability insurance, or supplemental security income as of the determination date, which has been set as December 31st of the previous calendar year. This isn't complicated mathematics. If you were receiving benefits on that date, you're in the eligible pool. Second, there's an income threshold component designed to target those who need this support most. Single filers with adjusted gross income below $75,000 and joint filers below $150,000 meet the income qualification. Now, some of you might be thinking that sounds like a lot of paperwork and verification, but here's where the government actually got something right. They're using existing tax return data from the Internal Revenue Service, which means most eligible recipients won't need to apply or submit additional documentation at all. The payment amount itself deserves examination because there's nuance here that matters. The base payment is indeed $2,000 for individuals who meet all eligibility criteria, but the executive order also includes provisions for married couples filing jointly where both spouses receive Social Security benefits. In those cases, each qualifying spouse receives the full $2,000, meaning a household could see $4,000 in total payments. I've always believed that the devil lives in the details, and this detail is significant for millions of American households, where both partners worked their entire lives and both contributed to the Social Security system. The government is recognizing both contributions with separate payments rather than treating married couples as a single economic unit, which frankly makes more sense from both a fairness and economic stimulus perspective. Now let's talk about timing. because this is where precision matters enormously. The executive order specifies a phased disbursement schedule that begins on a date that's been confirmed through multiple official channels. The payment processing starts on the 15th of next month. I know that sounds almost too specific to be true, given how vague government communications usually are, but the Treasury Department has actually published the implementation timeline, and it's worth understanding how they're structuring the rollout. The disbursement follows the same pattern used for previous emergency payments and tax refunds. If you currently receive your Social Security benefits via direct deposit, you'll receive this incentive payment the same way, and you'll likely be in the first wave of payments going out. Those who receive benefits via paper check will get their incentive payment via mail, but that typically takes an additional 7 to 10 business days for processing and delivery. The phased approach means not everyone receives payment on the exact same day, and there's a logical method to the sequencing. The Treasury processes payments in batches organized by the last 2 digits of Social Security numbers, which is the same system they've used for years with tax refunds. This isn't arbitrary. It's designed to prevent system overload and ensure accuracy in processing. If your Social Security number ends in 00 through 09, you're in the first batch. Numbers ending in 10 through 19 come next, and so forth through 99. The entire disbursement cycle is scheduled to complete within 3 weeks of the start date, which means even those in the final batch should see payment by early in the following month at the latest. Here's something that doesn't get discussed enough in these government payment programs: the tax implications. I spent my entire career thinking about after-tax returns, because that's what actually matters to your financial well-being, and this $2,000 payment does have tax considerations you need to understand. The executive order classifies this payment as a qualified economic impact payment, which under current Internal Revenue Service guidance means it's not considered taxable income for federal income tax purposes. That's genuinely good news, because it means the full $2,000 represents actual purchasing power rather than a gross amount that gets reduced by your marginal tax rate. However, and this is important, some states may treat these payments differently for state income tax purposes. Most states conform to federal treatment, but a handful have their own rules for economic impact payments. So if you live in a state with income tax, it's worth checking your state's Department of Revenue guidance. The underlying policy rationale for this payment program reflects something I've observed throughout economic history: the recognition that Social Security recipients represent both a vulnerable population during economic disruption and a powerful stabilizing force in the broader economy. When you put money directly into the hands of retirees and disabled individuals, that money tends to get spent rather quickly on necessities and immediate needs, which means it flows directly into the real economy. Unlike tax cuts for corporations that might get used for share buybacks, or wealthy individuals who might just add it to investment portfolios, payments to Social Security recipients have what economists call a high marginal propensity to consume. In plain English, that means the money gets spent on groceries, utilities, medications, home repairs, and other goods and services that support jobs and economic activity in local communities across America. I want to address something that causes confusion every time one of these payment programs gets announced: the relationship between this incentive payment and your regular Social Security benefits. This is additional money, separate from your monthly benefit amount. Your regular Social Security check continues exactly as before, on the same schedule, in the same amount. The $2,000 is a one-time supplemental payment that arrives separately. I've seen people worry that accepting this payment might reduce their future benefits or affect their Medicare premiums or create some other downstream consequence, and I want to be absolutely clear: it does not. This is structured specifically as a supplemental economic support payment that exists independently of your ongoing benefit calculations. The Social Security Administration has confirmed this in their official guidance, and it's actually written into the executive order language to prevent exactly that kind of unintended consequence. For those of you who manage finances for elderly parents or disabled family members, there are specific provisions in the executive order addressing representative payees. If you're designated as a representative payee for someone's Social Security benefits, the incentive payment will be processed through the same arrangement. The check or direct deposit goes to the representative payee account, and the same fiduciary responsibilities apply. The money must be used for the benefit of the Social Security recipient. The Treasury Department isn't creating a separate system for these payments, which actually makes implementation smoother and reduces the risk of payments going astray or ending up in the wrong accounts. One aspect of this program that demonstrates surprisingly sophisticated policy design is how it handles people who recently became eligible for Social Security benefits. If you applied for and were approved for benefits after the December 31st determination date, but before the payment processing begins, there's a supplemental eligibility review process. The Social Security Administration will identify these individuals and forward their information to Treasury for inclusion in a later payment batch. This means you're not automatically excluded just because your benefit approval came a few weeks after the cutoff date. It adds some complexity to administration, but it's the right approach from a fairness standpoint, and it shows that whoever drafted this executive order actually thought through the edge cases rather than just establishing arbitrary cutoffs. The economic context surrounding this payment initiative matters for understanding both why it's happening now and what it might signal about future policy directions. We're in a period where inflation has eroded purchasing power significantly over the past few years, and while Social Security benefits do receive cost of living adjustments, those adjustments are backward-looking and often lag behind the actual price increases that retirees experience, particularly in healthcare and housing costs. The $2,000 payment can be understood partly as recognition of this purchasing power gap, a way to provide immediate relief while longer-term policy solutions work their way through the legislative process. I've always believed in addressing problems at their root rather than treating symptoms, but I also recognize that people need to pay their bills today, not after Congress finishes debating comprehensive reform. There's also a demographic reality that makes support for Social Security recipients increasingly important from a pure economic perspective. The baby boomer generation represents the largest cohort in American history moving through retirement, and their economic stability has ripple effects throughout the entire economy. When retirees struggle financially, it often falls to their adult children to provide support, which puts pressure on the working age population. When retirees have adequate resources, they remain independent. They contribute to economic activity, and they don't strain family finances or social services. This isn't about charity. It's about maintaining a stable economic foundation. Now, I need to address the elephant in the room that I know many of you are thinking about. Is this really going to happen, or is it another case of government promises that evaporate before they reach actual people? I understand that skepticism completely. I've watched enough government initiatives fail to maintain a healthy dose of doubt about anything involving bureaucracy and large-scale payments. But there are specific indicators here that suggest this program will actually execute as described. First, the executive order has already been published in the Federal Register, which is the official government publication for rules and orders. Second, the Treasury Department has already allocated the necessary funds and established the processing systems. Third, the Social Security Administration has sent informational notices to field offices preparing staff for the influx of questions they'll receive. These are concrete implementation steps, not just policy announcements. The practical implications for your personal financial planning depend entirely on your individual circumstances, but let me offer some observations based on decades of thinking about how people make financial decisions. If you're currently struggling with high-interest debt, particularly credit card debt, using this $2,000 to pay down those balances could save you far more than $2,000 over time through avoided interest charges. If you've been deferring necessary medical care or dental work because of cost concerns, this provides an opportunity to address those health needs before they become more serious and more expensive. If you have adequate emergency savings and no pressing debts, adding this to your financial cushion gives you more security and flexibility for whatever unexpected expenses might arise. What you shouldn't do, and I say this with the benefit of having watched people make financial mistakes for many decades, is treat this as windfall money for purely discretionary spending unless you're in genuinely solid financial shape. The difference between people who build financial security and those who struggle often comes down to how they handle unexpected money, whether they see it as an opportunity to strengthen their position or as permission to spend on things they don't really need. As we approach the payment date, you'll likely start seeing advertisements and potentially even scams related to these payments. Let me be absolutely clear about something. You do not need to pay anyone to help you get this money. You do not need to provide your banking information to any private company, and you should never click on links in unsolicited emails claiming to be about your payment. The government will not call you asking for personal information, will not email you requesting that you verify your bank account, and will not ask you to pay any processing fees. If you receive your Social Security benefits now, you'll receive this payment through the exact same method automatically. The only exception would be if your banking information has recently changed and you haven't updated it with Social Security, in which case you should contact the Social Security Administration directly using the phone number on your official benefit statement, not any number provided in an unsolicited communication.